Hey, welcome back, guys. What a wild ride it has been. 2021 real estate numbers are in. Man, what a wild ride we've had. So, welcome back. This is Robbie Bro with Robbie Bro and team at eXp Realty here in Lafayette, Louisiana. And today we're going to do something a little bit different. I'm going to jump in because it's year-end review. We're going to jump into some Acadiana numbers. We're going to go into some hyperlocal, jump in a little bit more detail than what we normally do. I'm going to jump in, and as always, market stats are given by the Oracle from Markets to Consulting. Bill Bakke. Bill, thanks so much for sharing this stuff so we can go and jump in and dive right in and be able to run and share. So without further ado, go ahead and share some screens. We got the report that's popped up. So all over Acadiana, you've heard us preach for all year that it's been a record number. So red line represents 2020, blue line represents 2021. Acadiana, we had basically a pretty dead even year on our dead even month of December. Year over year, we ended up really, really high. We had an 18% increase in total number of sales. First time we've ever hit 7,000 sales, much less hit 6,000. Last year was a record year in total number of units. We were at just under 62. We're at 7,300. So things are really rocking and rolling as far as the total number of units are concerned. Our average time on market almost dropped in half. We were 28 days fewer on the market. And a lot of that reason is basically built on total number of homes that are available. And we're going to jump into that a little bit later. So moving into Lafayette Parish, December was actually the biggest month of the year for Lafayette Parish. We were at 431 homes sold. We sold just under that at 402, but we still finished off the year super strong. 4,800, almost 4,800, a little over 4,800 homes sold in all of December, from January to the end of December. Record year by nearly 800 closed residential units. Again, similar to what we were looking at, average time on market dropped in half. You look at some of these numbers of where we were compared to previous years. Again, 21 and 2020 are kind of an anomaly that ends up running out. We're going to start getting back to a little bit more normalcy for a little bit. So as long as the interest rate climate stands, and we're going to jump into that in a little bit. But when we compare December's compared to 2019, we ended up at, right at 3,400 compared to where we were the entire year. I mean, we're up 40%, which is darn near double. So life is absolutely crazy here in the real estate market here in Acadiana. Now we look at dollar volume, similar story of what we've seen. We've outpaced every single month after month after month, well ahead of what the barn burner we had in 2020. 153 million compared to 137.5 million. That's an increase of 11.5%. $1.7 billion, as Dr. Evil from Austin Powers would tell us. That's a $400 million increase in total dollar volume. And what's, it's probably not too much of a surprise to everybody else. We had price increases that, along with the record setting number of homes, prices are getting more and more expensive because the affordability of what you can go and borrow out in the open market has it's just been a lot cheaper money to be able to go out and get a little bit bigger house, a little bit more of an upgrade of what you're used to. So that increased 23% compared to 2020 from 2021. Now, affordability, what we are seeing, the trend that's running out, people are running outside Lafayette Parish. Even that's going up. We went from 157,900 to 179,300. So finding sub $200,000 houses, as everybody has been noting, has been kind of difficult lately. And we did quite a bit of business outside Lafayette Parish between St. Landry and St. Martin and Acadia, Vermilion, Iberia, St. Mary, all of those parishes. We ended up nearly $500 million, not quite, but about 55, 60 million less than $500 million in real estate sales. Again, another record for Acadiana. And the records are just starting to jump up. When we compare to this time last year, outside Lafayette Parish, 2019 was 315 billion, almost 40% increase. This is crazy, crazy, crazy numbers. Jumping into Lafayette Parish, similar story what we had all over Acadiana. We finished at 111 million for December, which is up by 4 million in total sales. That's a 3.33% increase. Again, just like we had talked about, we've crossed that billion dollar mark back in October. We were just shy for December, but we finished off the year nearly 30% higher than what we did in 2020. And strangely enough, we had strong cases for both new construction as well as resale homes that were out and about as far as in the marketplace is concerned. So resales, they were up 29%. New construction, as you can see, up 29%. That's cumulative total year to date. We had super, super strong numbers. Those prices, our average sales price, if you look back to that previous slide, like we were talking about, we had a $212 versus $267,000 price difference. Most of that is due to Lafayette Parish prices being so much more expensive. Not surprising. Our new construction was up 7%, resales up 8% or almost 9%. So pretty close. Again, compared to what we were the previous year, the last normal year, 2019, we're almost 65% ahead of what we were. We were 65% ahead of what we were in 2019. Absolutely bananas. So, we always talk about leading indicators. What does that happen to look like? We look at homes coming on the market. This is homes that are coming off the market, pending transactions in the total, in all of Acadiana. We had a good month last month, a little bit down from October. Typically what we see, October is a little bit of a peak for fourth quarter. It tends to tamper down for, the holidays, and we pick right back up come January, February. And in this case, March was really crazy. Obviously, if you're looking at right here, March and April was kind of desolate for 2020 because this is when all the, 2 weeks to flatten the curve started. But overall, up 12%, December over December, cumulative total year to date. We had nearly 7,500 homes go off the market from a pending sales standpoint. What this tells us moving forward, we're still more than likely going to pass up what's happening in January. We had some pretty strong numbers that were running through. We'll pass up what we did in 2020. We'll be a little bit short potentially on closed sales for January. Not necessarily a bad thing. We're going to talk about the other side of that coin in just a second after we go through and look at Lafayette. Lafayette Parish, again, we ended up beating out the pending sales compared to what we were this time last year, 349 compared to 308. That is an increase of 13%, nearly 20% increase year to date. So still, overall, very strong market moving forward as far as the demand is popping up. So we've got a demand that's jumping up. The other side of that economic curve, obviously, is the supply. What happens to the supply? We're not going to jump into dollar volume. I want to make sure I give as much value and keep the timeline short for you. So total number of new listings. We had a pretty big decrease from November to December in total number of homes that came on the market. We went from 630 to 467. That was a 26% decrease in the total number of available homes for sale. Strangely enough, is what we're seeing. People are still struggling to be able to find homes for sale. We had a cumulative change from 2020 to 2021. We listed 10% more homes, just under 8,100 homes for sale compared to 7,300 the year before. That's an increase. Normally we would think, man, this is probably a good thing. Notice it's half of what the demand things are coming up off the market. So as homes were coming up, the demand for, the scarcity of what's happening, our demand is actually gobbling up this inventory faster than what it can come onto. And it's still tending to trend that way, at least running through December's numbers. So far in January, we're seeing similar numbers that are running right there as well. Lafayette Parish, similar story. We had a pretty big drop off on the total number of new listings that came through from November to December, 28% instead of 25%. Cumulative year to date, we were right at 12%. So again, we're outpacing, our demand is outpacing our supply. So as long as that demand is outpacing the supply, we're still running into a similar trend of what we've been dealing with the last 12 to 18 months. Even if we were to outpace our pending supply, the demand tends to come up. The amount of homes that are available for sale, it's still slim pickings. We would need to have multiple consecutive months of double-digit increase in supply compared to less demand in order to be able to get back to a more even keel style market. So when we look out, I'm not going to necessarily jump into Lafayette. I do want to jump into Lafayette Parish. This is one of my favorite ones that Bill does every year for, he does every quarter to jump into each one. So just to kind of go in, explain over our geo areas, all us real estate agents, when we're looking online inside of our MLS. Area B and C is Karen Crow. Area D is 70507, 70501. E and F is Scott and Dussault. G1, that is 70508. I think River Ranch all the way to the Broussard and Youngsville side of Lafayette. G2 is 70503. G3 is 70506. H is partial Broussard and partial North Side. Area K is moving its way towards Maurice. Area N, think of Fernwood all the way through Sawgrass, Milton area. O's more Youngsville, Broussard, and Area P is a little bit deeper Youngsville, like Sugar Mill Pond. Some things to really note: every single one, with the exception of Area H, had and Area D, had double-digit appreciation as far as the total number of closed sales. Double-digit growth compared to closed sales. Dollar volume had some massive numbers. We had 55% increase here. Area E had 107% increase in the total number of dollar volumes of homes closed. G2, middle of town, had a massive year, 108 million in total closed homes. This is 70503. You know, your Brentwoods, your Greenbriers, your Bendel Gardens. We had lots and lots of activity. Strangely enough, it was one of the slower moving, even at 2.1 month supply. Typically, all of these favor the seller as long as everything is priced out accordingly. Market is peeling back and pulling these homes off the market fairly quickly. So, as far as one of the other things we like to jump in whenever we're talking about number of months supply from 0 to 5 months, this favors the seller. Limited amount of choices, fewer things for us to be able to, buyers to be able to choose from. Typically favors the seller. Typically will involve increased prices. Doesn't necessarily mean we can charge $1 million for a $100,000 house. There's going to be some properties that actually hang out and stick out on the market. That's one of those reasons. There is a limit for what people are willing to go put up with as far as total number of upgrades that need to be jumped on, or updating, or whatever the perceived, whether it's deferred maintenance, maybe you need a new roof, maybe you need to paint the whole house, maybe there's a lot of stuff that we can't. We are not in a market where we can try charge full blown retail and have $50,000, $60,000 or $30,000 worth of repairs to be able to jump in to be able to do. So more on that as far as looking at what equity position happens to look like. But I wanted to jump in and talk about the total number of homes in number of months supply, what that happens to look like here in Lafayette Parish for all, now that December's done, you can get a clear picture of what that happens to look like. So while this looks a little bit like the matrix, I'm going to try to dumb it down real quick. We've got a couple of different columns. We've got a price range column on the far left, number of reported sold. This is how many homes sold in each price range in Lafayette Parish and how many total number of homes are for sale. The far right, number of months supply, we call this absorption rate here in the real estate industry. This basically says how long does it take the number of active listings in this this column here to move on to the number of sold columns and absorb these homes, assuming nothing new shows up on the market. Again, we want to see markets that are not favoring either one are going to range anywhere from, they're typically a 6 month supply of inventory. Anything less favors the seller, anything more favors the buyer. The more things buyers have to be able to choose from, the longer they typically stand to wait. So every single price range, with the exception of $1 million and above, is running sub-neutral markets. So, when we're priced competitively, if it's something that you guys are thinking about potentially making a move on, there's really a pretty decent opportunity to be able to jump in, make money, depending on when you've purchased that house over the last, whether it's been the last couple of years. There's an opportunity for appreciation to jump in, as long as we don't get crazy. So lots of things being able to come up to get your home ready to be able to go on the market. What could end up slowing us down? So one of the things that ends up jumping up could potentially be interest rates. We're going to see interest rates climb up a little bit over the next couple of months. The Federal Reserve has stopped buying mortgage-backed securities, which is going to tick up our interest rates moving forward. At the end of the day, we're still running low threes right now, 3.2, 3.3 on a 30-year fixed rate mortgage, about a half a point back on a 15, and right at 2.875 to 3.1 on government, FHA, VA, all that other fun stuff. So we are more than likely, at least over the next 3 to 4 months moving forward, we're going to be seeing a similar climate of what's happening. One other quick thing I wanted to jump into before I forget. This particular graph right here, we had at the very bottom, we had 4,800 sales in Lafayette Parish, 4,000 sales last year. We had 680 homes compared to 489 homes. This is Lafayette Parish. So what with major jumps in demand, we're still working with a good chunk of homes. And remember, this is 0 to 1 million plus from Karen Crow all the way to Youngsville. There's not a lot of things to be able to choose from. With, if we're looking inside 240 to 260, there's 23 homes on the market total altogether. That's it. So moving forward, we're going to have to see a absolute glut in supply for things to be able to change. I forecast a pretty healthy 2022. It's going to be fairly crazy. I don't think we're going to see quite as big of increases month over month compared to what we did the previous years. Although I do plan on seeing us blowing the top off of 2019, our last normal year. 2020, the beginning of the year, we're probably going to blow the top off of those numbers too. That last normal first quarter. So any questions? If you guys are looking into, maybe it's a possibility timeline, we're kicking around, making a move, struggling, trying to find something on the market. We do have inventory that's kind of in situations like what you happen to be in. If you're, thinking about moving, wanting to see what it happens to look like, if you need to sell first, buy first, what are the steps that you need to take? Give us a call, shoot us, you either shoot me a direct message. You can call me on my personal cell, 337-658-5690. I'd love to talk with you, sit down with you. Any questions at all, we're here to help. You can always reach us up, of course, at robbiebro.com. Y'all make it a great day and have a great weekend. Talk soon.